Per usual, everything on this channel is for educational purposes only, is not intended as financial advice. Haven't had too much to say, so I haven't said much of anything. For the most part, I think there are a lot of charts that are inverse of one another and just waiting for a move. They're waiting for a liquidity spike. They're waiting for the Fed to say rates are going to hold at a level or they're going to cut rates, less likely. But if you look at DXY, gold, S&P, Bitcoin, all very much at a standstill. So DXY, this is a weekly chart. Most of these legacy charts don't move very quickly, which the benefit is you're not forced to make quick decisions, but the detriment is you're not putting the reps in making those trades like you are if you're trading crypto, even on a daily volume, and you're looking at, tens of charts, making all those trades versus just, waiting for the DXY. Different strokes for different folks, but my point is this thing hasn't moved in quite some time. But lately when it has moved quickly, and I don't think you can front run this, but from my seat, this does look like a bearish continuation here. This does look like a mixture of inverted cup and handle, head and shoulders, Eiffel Tower, call it whatever you want. There's nothing bullish about this. Just like there's nothing bearish about the S&P right now on technicals. So if this does return to that 90, 92 level into halving, rates coming down into halving, that is a very good scenario for us on the crypto side of things. Gold, again, standstill, not much going on here. Doji party, Doji city, lots of indecision up here. I can't be bearish on this, as people have said there's no such thing as a triple top. So again, this should be continuation, just as Dixie should be continuation to the downside. There are tons of patterns in here as well. There's Adam and Eve, Eve Adam. This whole thing is an Eve Adam. Multi-year, this is like a decade cup and handle, ridiculous as far as that's concerned. But none of this is bearish, and gold going up is not bearish for Bitcoin. So gold above 2050, and we're laughing. DXY really below 100, so it's got quite a ways to go. But again, when this thing moves lately, as in since 2021, it has really chugged along. It's not, this 2018 to 2020 period where it's just ratcheting up on the roller coaster. The Fed has made historically, past 2 years, very quick moves, and that's what has caused this. But anyway, DXY is poised to move down, gold up, S&P up as well. There might be a recession coming, there might be terrible earnings, there might be terrible XYZ, no basis in reality. Sure, but there are very, very few people, if any, that I'm seeing talk about the potential for an all-time high retest in the S&P. It sounds ridiculous to say, but the technicals look extremely good for this. The only one other person I've heard talk about S&P in a bullish way like this was also another technical trader. It's very simple. You're making higher lows over and over and over again. Now, we break that on this 40-40 breach, but this looks very good. It is very hard to be bearish on this. Now, there's going to be tons of people coming in here saying they want a short, not me, but the market. Tons of people coming into the market saying, look, this is a great short. Okay, but, we've been here for a couple of years now in this range, and I think 2021, we were also at this level. So we've been at this level for 3 years now in April. I don't know, looks really good. If the Fed liquidity spigot gets turned back on, S&P should move up, Bitcoin up as well. Looking at the power law corridor, just basically a channel since inception that it's held within. This was created here-ish in 2018. So it uses the data pre-2018. It's important to tell people that because it is curve fitted, but since 2018, it has held up, even through COVID, even through the most recent drop. So this looks closer to the bottom than the top to me. There's really not much else to say here. I don't know, 200K? I mean, just pick a number. We're not even really started on the bullish rally. Seriously, I mean, we're just sort of recovering like we were post-COVID, recovering 2016, post-GOX, right? It's that type of recovery still. I also have the 20-week and 200-week MAs on here. Not across most people are watching, my guess. Anyway, we are flipping bullish on this. I like that we're above the 20. We're finally back above the 200. And historically, above the 20 is where you want to be if you're bullish. So things look good on that front. Weekly cloud, just another way of showing we are not even, we are not November 2021. It might feel like it based on price action, but we are not. We are June 2019. Okay, so this may take a while to make it through the weekly cloud. The difference here is that Bitcoin's having, somewhere in here in 2020, whereas the halving coming up is going to be in early 2024. So again, looks great. I mean, I keep saying the same stuff over and over again every week, which is why I just don't make a video, because what am I going to say? Things look good. Things look fine. Like, this is a TKC clamp. Yes, there are levels here to be very careful of. Low time frame, high leverage type situations. But I'm a buyer at the Kijun all day. And stop losses on longs really should be around 27.5, because you've got horizontals, you've got a bunch of other stuff I'm about to show that is suggestive of further downside if we break that level. And I like that 25K support. This is Alligator Fractal. It is a series of 3 MAs with these hats. If you get a low, high, low, you get what I call a bull hat. And then if you get a high, low, high, you get a bear hat. The point is, this gives you an idea of the trend. It can be very, very noisy, which even on the daily, this is pretty noisy, but we're flipping bullish again here on these MAs. And it's also telling you the stop loss for anything on the long side is around 27. Horizontal, I mean, not rocket science here. And long entries are anything above this nasty lightsaber Darth Maul we had the other day. Pretty generic vanilla analysis on that. This is a pitchfork. I saw somebody post, I forget who, I'd give them credit, but I like that we are above the midline. I like that we are approaching a zone which we have significant price history. We have a history of being overbought considerably for an extended period of time based on this rate of change, right? We have just held this level for quite some time. For the home pitchfork enjoyers, this is the 2x wing of the pitchfork, if you will. So we have some room based on time, based on distance from mean. And again, this is telling you if we break down below 27, we likely start to fill out the lower side of this pitchfork. So that's 3 different ways of saying 27K is very important here. This being the third, where we have a horizontal, sure, but we also have pretty ugly, messy pattern that no one's going to agree with me on. That's fine. But if we get a right shoulder here, which I'm going to call it a right shoulder, it's 100%, in my mind, traded as head and shoulders, right? It's very not textbook, very gross. Volume would not fit, right? But I cannot be bullish on something that looks like a head and shoulders. We're also on the precipice of this old-ish diag from earlier in the year. So just some levels here to watch on Bitcoin, but in general, things look fine. I don't think a pullback to 24, 23, whatever, 25, I don't think that would be a bad thing. We need a series like this March stuff where we just sold off, right? You get late shorters, you get people who want to get longer back in. In general, trend looks completely fine. And then if you're a lower time frame person, I've been watching the 4-hour for lower time frame signals, which has been pretty good since the beginning of the year as far as catching the speed of the market. And you can see if you're a cloud enthusiast, not quite have a bullish come out twist here. TK is snaking back and forth. Some people will tell you they like the TK above cloud as well. So this has time to make a decision, and it's telling you anything below 28 is potential watch out territory. So worth keeping this in mind as well. On ETH, I don't really have too much to say. I mean, not much has happened for quite some time. If you are a ETH person, then nothing I say is going to matter to you. And if you're not an ETH person, you're agreeing with me because, I don't know. I mean, price is the same. You can talk about yield, you can talk about deflation, whatever you want to talk about. But I'm not seeing DeFi takeoff. I'm not seeing NFTs like they were. I'm seeing layer 2s eat ETH's lunch. It's not generally alt season, even though ETH is, really above alt status at this point. There's no pattern here on technicals. I don't see anything specific. Does it look fine? Sure. Could it keep running higher? Yes, but I don't expect it to outpace BTC. Now, if rates IRL come down, I expect DeFi to start to do better. I expect stables to stabilize. I expect people to come back into the market and want to borrow, but we're just not seeing that right now from my vantage point. I could be totally off base there, but based on the metrics I look at, not seeing it. And I think that really feeds into this. I think the layer 2 stuff is more hurtful than helpful for ETH, which is not a popular opinion. We don't yet have those applications on layer 2, in my mind, to help feed layer 1 here. So if you're doing all your activity on layer 2, which you should be, ETH gets the short end of the stick in my eyes from price. ETH BTC, I don't know what this is, if it's some sort of harmonic pattern. Looks like could be diamond top situation, I don't know, double top, right? Whatever it is, it's not bullish. It doesn't look bullish to me. Much like this stuff previously, measuring this out, we could see some ugly stuff. Again, I don't see anybody talking about 0.04 for ETH BTC, but just based on technicals on measuring this range, high to low, looks possible. Not saying it's probable, saying, look, possible. ETH needs speculation. It's a giant unregulated casino. That's just what it is. And we're not seeing that per cup. People don't have money to spend on groceries, let alone go YOLO long on random meme coins, even though I know certain meme scams are doing well recently. Pumping nubs, that sort of thing. Anyway, really, I don't have much else to say about alts other than watch BTC dominance, because if BTC dominance reverses, then yes, expect alts to do better. But right now it's definitely Bitcoin season, and maybe you rotate, maybe into 52 to 55, where the range of dominance measures. But if you're not familiar with dominance, it measures Bitcoin's market cap against everything else. I think on TradingView that literally means everything else, including stablecoins, which may be a good thing. I'll explain in a second. But if regulatory stuff is bad, if the US is clamping down on altcoins, Bitcoin should do better. So why are you sitting in nonsense, right? If you want to eat the downside, go for it. Not financial advice. But this looks very strong. Again, this is a multi-year consolidation breaking up from a range. Looks pretty good. We don't have Sam in here spilling his seed around on Oxygen and Maps and all this other garbage, right? You're not seeing that. You're seeing USDC in the blue here decline in circulating supply, Tether rise, and this Tether dominance, I guess you could call it, just growing by the day. So this is another measurement for me of the health of Web3 or altcoins or shitcoins or whatever you want to call it. But if US regulation clears up, gets less toxic and hostile, start to see USDC perk up. Let's say we get some stablecoin regulations in the next 6 months. You may start to see some of this money come back onshore. Let's say the banking stuff clears up, right? All this is sort of related. That's why it's worth knowing what the Fed is talking about, what's going on in banking. We just had a bank fail on Friday. Haven't yet had the official announcement. Probably will see that this Sunday, but a lot of hostility towards crypto businesses in the US versus, let's say, Hong Kong, where they're telling banks to be super lenient for opening bank accounts for crypto businesses. So I do think the most important thing right now is DXY. It's gold, it's rates, it's what's the next move, it's how many banks are going to fail before Powell says uncle, that sort of thing. So that's all for this one. Let me know what you think in the comments below. Like, dislike, share, subscribe. Happy trading.